Welcome to another episode of Broker Watch. I'm James Bernius, the Business Development Manager of GTA West here at RiverRock MIC. And I'm joined today by Nick Kyprianou, President and CEO of RiverRock. Welcome, Nick.
Hi, James.
It's always a treat to have Nick here. He's a wealth of knowledge. He has over 30 years experience in the broker market. He's held numerous senior management positions in the alternative lending sector, and he started his own very successful MIC in 2014.
That's correct.
So I guess the first question I would begin with, Nick, is what motivated you to start a MIC?
Well, it's a bit of a long story, but I'll give you the shorter answer, where I really saw the winds of change happening quite dramatically for institutions. So I previously was the CEO of Equity Financial Trust, which is Haventry Bank, and prior to that I was president of Home Trust. And what I saw with the introduction of B20 by OSFI, which was the residential underwriting guidelines put upon the regulated lending institutions, where they were really changing the landscape on what they could and couldn't do. And I really saw them kind of squeezing them out or reducing their reach into the alternative space. So I really felt that this was a very good time to start up a MIC that isn't regulated by OSFI, and we could set our own risk underwriting standards, and I thought that that would be a great opportunity.
Well, what I'm really curious about is what are your thoughts on the current mortgage, or rather housing market?
Well, the housing market, at the beginning of the pandemic, after we were into it for about a month or two, I felt that the market would be pretty strong on the detached semis and townhouses under $1 million values. I was nervous about the high-rise condo market, and the reason being is if you looked at the data, the vast majority of people that were impacted by the pandemic were the low income earners, like servers and people working in kind of the hospitality industry, and the vast majority of those people aren't homeowners. So the people that were homeowners weren't impacted by the pandemic from an income perspective. They had to work from home, however they were getting their full income, and in some cases they were being able to save more money because they didn't have transportation costs and other costs that go along with commuting back and forth to work. And with rates being as low as they are, historically low, I really felt that people would see this as an opportunity to buy. With rates being as low as they are right now, there's never been a better time to buy a house. At rates as low as they are today, every payment you make, over 50% of that payment comes right off the principal of the loan. Right. When rates were 6-7%, you took a 25-year amortization. After 5 years, you maybe paid off $1,000 off the principal. So I think people that had some savings, felt comfortable with their income, really saw this as a buying opportunity, and that's why they reached out into the marketplace. So that's what happened then. I think there's a bit of an irrational exuberance right now because of a shortage of listings, and people are getting scared, so they're overbidding on some houses. But I think as we approach the spring market and get into the April-May markets, I think the listings will pick up, and I think things will start to level off a bit. But I still think values will increase the balance of this year and next year, just not at the same level of intensity.
What I'm curious about is, have you seen a change in the the borrower profile?
For us, from our perspective, from the MIC perspective, I saw a big change when B20 introduced the stress testing on rates. Right. Where, even though rates were at the time, I think 2%, you had to qualify for a rate over 4%.
Right.
And so, what we found in a lot of new construction, people were getting ready to close, and then all of a sudden the banks pulled their commitments because they didn't qualify under the stress test. So we were getting what I felt to be a very high caliber borrower that had good credit, they had good income, but they just didn't meet the threshold on the stress testing, so we were getting very good clients. Right. Not saying that we don't still get our whole mix of clients, people with bad credit or self-employed that can improve their income, or people in power of sale that we refinance. We still get all of those, but we got a big wave of people that we wouldn't historically get because of these changes.
Do you think that there's going to be a big ongoing impact of the pandemic that we're going to be seeing in the next 3 to 5 years?
I think it's going to be, I think housing's become very important to people. People, I think that maybe were putting house buying off have accelerated their plan, and that's due to the fact that homes become more important to people because people have been working a lot from home. I think people will be going back to offices, at some point, but I still think home ownership's taken on another role and a more important role for people. And rates being as low as they are, it's a great time to purchase. So I think that from that standpoint, I feel pretty comfortable. The other factor in that they don't talk about is, last year and this year we're having no immigration.
Right.
I understand there's over 400,000 people that have been approved to immigrate to Canada, and the federal government is very committed to immigration. They've increased the limit from 300,000 to 400,000 annually. So next year you'll start to see those immigrants start to come back to Canada, and the immigrants that come to Canada over the last several years are highly educated and generally come with cash. So they hit the housing market within a relatively quick time frame, maybe 2 years or so. Not like the immigrants in the 50s and 60s, which weren't the same profile. So I think that that's going to have an impact. We already have, in the Southern Ontario area, we already have a shortage of real estate or housing. So this will just compound the problem when immigration gets turned on again. So that's why I don't see, you're going to always have ebbs and flows in values, up a bit, down a bit when various things happen. But for the long-term strategy, you're always going to be better off buying a home.
Right. Well, thank you for your time. We certainly appreciate your valuable input. If anyone has any questions or concerns, they can always contact their local business development manager. And until next time, stay safe.
Thanks very much, James.